What's going on, traders? In this video we're going to talk about how to expect a reversal for the trend, because today I noticed a lot of traders were looking for reversals way too early and they were trying to predict a major trend reversal for the market, and it is quite dangerous to be looking for this type of setups unless you know what you're doing, because mostly you want to stay with the trend. Trend is your friend and you can make money just following the trend. And when you're trying to pick the top or bottom too early, you can get a burn and it's not a great way to trade. So in order for us to understand when we should be looking for market to reverse, we need to understand that we need to follow our trend lines. And the reason we follow our trend lines because there is a rule in price action, trend lines rule, that says after price will break the trend line, traders will attempt to create a new extreme. No, and this is not made up. I'm going to prove it to you that this works. It works on a micro level on these short-term trend lines, and it works on a much larger trend lines. Okay, and today start with a trading range looking structure. And as we talked about the trend lines, as you guys can see, during trading ranges you want to draw tight trend lines as possible. Okay, take a look, guys. I have a tight downtrend right here. I have a break and price created a new extreme, and after you have a break and a new extreme, that's when you can be expecting a possible reversal. Not only reversal, there can be a period of like 30 minutes or an hour of correction, but you can expect two things: reversal or correction. And from that correction, the downtrend may either resume or then you can reverse. Okay, in trading ranges it usually reverses straight on the dime like that. And you guys, you can see price working higher, you have a break, you have a two-legged pullback, form break, and you have a move to a new extreme. And what happened next? Price instantly reversed and pushes to the EMA, and you have a break, new low, and price instantly reversed, and price is working sideways right now, consolidating. So you guys can see this is how trend line works, and this is how trends in price action works. Okay, now I want to give you guys a little tip here, because I mentioned that in trading ranges you want to draw trend lines as tight as possible, and you may be wondering why I didn't draw it like this and rather I use the wider pattern like this. Well, it is because you take a look, you have this uptrend working high, you have a break and you have a new extreme, you have a break, another new high, pullback, another new high, and you keep pushing higher and you keep pushing higher, and this overall leg is much larger than this tiny leg right here. And plus you get this early swing, you get really early swing right after the bullish trend started. So this is why I like drawing a little wider one, because you keep pushing higher, and once you see a price making new extreme and new extremes, there's almost always a bigger pattern in play. The same way like we had a new extreme right here and price kept pushing higher, this is where we found this channel. Okay, but you may be wondering, hey Thomas, price push below EMA right here and you keep pushing lower, and take a look. Doesn't this look valid? Because this looks fairly valid, and this would be a great assumption. The only thing here is that during trading ranges, these white patterns, these large patterns in trading ranges, they just don't work. For whatever reason, price action just doesn't operate that way. We can take a look to the Friday's session. Just trend lines that you draw like this, they don't really, this is not how price moves in trading ranges. Okay, you don't want to be drawing the wide patterns like this in trading ranges, because that's not really how you can trade trading ranges. In trading ranges you want to really draw extremely tight channels so you can see breaks and new lows, so you can see break and new high. This is how to trade trading ranges. So just a little tip for you, don't get too confused when you're trading trading ranges, and don't be looking for these wide patterns in trading ranges, because just price action doesn't really act that way. In trading ranges, the highs and the lows are so strong that you only need to follow the really steep and really tight channels. Okay, so as I mentioned, as price is pushing higher right here and we're following the rules, we also played the trading range right here, and there was the first trade for the day. And by this time, I'll be honest with you, I wasn't really looking to go long yet, because this was looking like a congestion. We were very close to this resistance, and I was expecting for price to have a failed breakout, pull back, and then push below EMA and go back into this range. What I missed today was the fact that there was a bullish imbalance. You guys can see healthy trading range, you go from highs to lows, and from lows to highs, and from highs to lows, but we couldn't even make it to the support. And then, you know, we kept coming short, and this is telling you that there's a lot of bulls in the market and price kept pushing higher. And this is now short and downtrend break, new extreme, This is a two-legged pullback and it's a second entry long of 2 key entry points. This is a failed break lower. In hindsight, this looks great. When I was watching this live, I was probably way too cautious. And then price breaks this trend line and you have a second entry long right here. But by this time, look how price is congested. This is a wedge pattern. You're going along directly into this resistance. I think it is really safe to just sit on your hands here because it is really congested area in the markets and you really want to be patient here. So, and I was still playing in the range here, so I was expecting for price to pull back, but look what happened. Price didn't pull back and instead reversed higher. So I have to switch the gears and I have to adapt to the trend, and trend is bullish. How do I know it? We keep making higher highs, higher lows. EMA is pointing higher and look how nicely this trend line holds price. Okay, and this is where you have the bigger channel, the bigger pattern, and this is where right now the trend is up. And this is really important because we're going to get to the situation where a lot of traders were trying to predict the market to reverse, and we're going to talk about what to pay attention to. As the market keeps pushing higher, you know the high probability setup is second entry at the key entry point, either EMA or trend line. But in this instance, you just get a bunch of first entries, and this is really hard to enter, and it's not a high probability setup, so just stay away from these first entries. Look what you have here. You have a new high, you have first entry long, pullback, second entry long. This is a two-legged pullback, but take a look how far away you are from EMA right here and the trend line additional key entry point. You don't want to take the second entry long. Trend is strong, I know, so you can make a case here, but you're just coming off the upper side of the channel, and you're most likely heading to here, so you just really want to be patient. But this is the first trade for the day that I tried to take, and this is a reason why, because this is a trap. Because if you guys take a look, you have a first entry long, second entry long, and you have a bearish bar. So the idea behind this setup right here, it is to lure in all the shorts that are trying to reverse the market, that are trying to pick the top for the trend. They're looking at this and they're saying to themselves, look how strong and steep this market is. It has to tilt any moment. I have to just go short here. It's looking way too nice. We're far away from key entry points. You know, this trend we already moved too high up. It's time for a correction. And that's not how you play the trend. You know, you have to resist the urge to listen to common sense. And so idea here is to trap shorts who are trying to pick top. And idea here is to also shake out weak longs who got long way too early. The people, they pulled the trigger here way too early on a second entry long, far away from key entry point, and they almost got stopped out. If they got stopped out here, this would have been a gorgeous trade. So this is trapping shorts and this is trapping both longs. And this is why once we trigger lower, ticked everybody in an instant reverse, nice big bullish bar. In this instance, there was additional attempt to get to the EMA key entry point, but the market was so strong that price instantly reversed, and this is where we tried to go long here, but unfortunately, me personally, I got left behind here. I couldn't even get in. This happened so quickly. I got my limit order here that you just have to let this market go. And then you have a second entry long right here, but the same story. You're far away from key entry points. You're coming off the other side of the channel, so you want to be patient. So right now I'm 0-0 for the day, and here I took my losing trade today. I don't know what happened here, because this is the new high. We have a first entry long, a second entry long, and it already made a scalp portion. And it pulled back and it created this nice bullish inside bar. And I thought we may continue working higher, but you really don't want to go long here because the second entry long already played out, and look how it reversed. You know, if there are bulls in the market, the second entry is going to generate some sort of momentum and the market is going to skyrocket, but it's not. Okay, so I just, you know, this is only mental error. This is nothing regarding price action. Nobody's get trapped here. It is what it is. Today was extremely slow market, and now here comes the situation, because price broke this uptrend and traders were asking me if it's time already to look for failed second entry long here, if it's time to look for a reversal pattern. And remember the trend line rules, follow them. After price will break the trend line, traders will attempt to create new extreme. And at this point on, once we are pushing lower, we expect, what do we expect? We expect for price to push above the EMA, and from EMA to hold prices and continue working in the new high direction. But look what happened next. Price pushed above the EMA and instantly pulled back, and we are now below the EMA. So since traders are seeing that we're not going higher, they still want to go short here. And I was still sticking to my guns. I was still following the rules. And even though this second entry short is really tempting and probably a great trap for advanced traders, you're much safer following the rules and letting the correction play out. This is just a correction because you still don't have a new high of the uptrend. So this is a first lag, little pullback. Second lag, you have this downtrend, you have a break and a new extreme. So the downtrend correction played out, and like clockwork, look what happened. Market pushed back above the EMA, looking to create a new extreme. This is how price action works. So after you let this correction play out and market attempts to create a new extreme, that's how you know that the uptrend played out. And take a look at the 5-minute chart, guys. We have a strong uptrend working higher, price is above the EMA, and we are just in this correction phase. But are we looking for failed second entry longs to reverse the market or predict the market to have a major trend reversal? No, we are not. Take a look, guys. We have a break of this channel and we have an attempt to create a new extreme, and what we did, we only created a double top, which a lot of times is enough. Close enough in trading a lot of times. So this is what we can consider as a break and an attempt to make a new extreme. And from that point on, market pushed below EMA and a downtrend started. Okay, this is when we can be now looking for shorts. We want to be safe and on the right side of the market. Take a look, guys. Price broke this downtrend. Are we looking to go long on this bullish correction? We are not, because after price will break the trend line, traders will attempt to create a new extreme. And this is what is happening. So you're not thinking along in this area. You wait for price to create at least a temp for a new extreme. Take a look what happened. We couldn't make a new high. Market pushed lower below EMA. And by this time, I was still expecting, this is the new low, first entry short, second entry short. It didn't trigger here. The horrible bars are here. So there is no entry. But I was still expecting at this point on for market to push up, because take a look how strong this uptrend was. Okay. And now the market pushed lower. And since you see market pushing lower like this, that's when you finally can look for reversal. Okay, you cannot rush these things. You have to let the market play out, and market keeps pushing lower. You have a new high. You don't get triggered nowhere right here. You have a first entry long pullback, second entry long, but you're far away from EMA. And I was hoping for price to kind of tick back and give me the second entry short, but it didn't happen. The second entry short came all the way down to here, but you already moved too far. So you cannot enter here, and you have a new low, and you have a first entry short pullback. You ticked one tick higher, instant reversal, and I was thinking that I'm gonna jump on this second entry short. But take a look at how big this bar is. This is unenterable. This is almost 5-point bar, 4 3/4 of a bar. So this is unenterable once again. But right now you're working lower, you're below EMA, you have this bigger pattern working lower. So what you're looking for, the same thing you were looking for right here, second entry longs at the key entry point. You're looking for second entry shorts at the key entry point. Look what you have. You have a new low, first entry short, pullback, and this is still a first entry. Once again, it would be better to get a ticked higher and instant reversal on a second entry short lower high, but it didn't happen. But take a look, we got 2 key entry points, EMA and trend line, holding price really nicely. And you pretty much have to pull the trigger here, because you're just not gonna get good entries on a day like this. And market pushed lower, and you have a new low right here, first entry short, pullback, second entry short. And I was preparing my limit order, but the signal bar was once again too big. Few traders, they waited for this bullish bar to finish, and once this bearish bar triggered lower, they got short right here. Slightly aggressive, because I like really to wait for the bars to finish. But you guys can see the idea how the market moves. Basically, there are second entry shorts on the way down, second entry short all the way down, second entry short all the way down, second entry short all the way down. Whether it is a clear second entry or just some sort of weird variation, this is how just market moves in trend. And once again, we had a break right here. And traders once again were expecting, do we now look for reversal, and do we now look for reasons to go long? Well, we have a tiny little break right here and a new low, but this is really not too visible, and this downtrend was really strong. So I want to see more proof. Okay, I'm just not going to predict major trend reversal just right after this downtrend. What I want to see, another chance for market to push lower. And take a look, guys. This bullish correction played out with the break and a new extreme. It pushed back below EMA, so this is good. It's confirming once again the bearish bias. And once we now couldn't make it to this low right here, this is where we can be now looking for potential long setups, because the push below EMA was supposed to get all the way down to here, but it didn't. Instead, the market is right now chopping in this trading range, so there's probably no entry right here. But this is how are you expecting the reversals. You always wait for price to create a break in new extreme, You don't want to be shorting when you're in the face of correction. Okay, you don't want to be going long right here when you're in the face of correction. Let the trend play out. These are big trends, and you need to give the correction rooms. Okay, what happens that these corrections are starting to be a little bit bigger, but that's okay because the trend is extremely big. Okay, so the correction, you need to give corrections a little bit more room. Same thing right here. You need to give the correction a little bit more room. And market push lower, and this was my last trade for the day, and it looks like I got a little bit lucky. I ended up being break even for the day. This, once again, this is extremely big. 4.25 points signal bar stop loss. Once we push back below EMA and we create this lower high setup, I was thinking the market may continue pushing lower. So once this bar ended higher, I snuck in with the limit order and got out. I was quite lucky because then otherwise it would have stopped me out. But you know, this is what it is. Sometimes you get a little bit lucky, sometimes you don't. But you know, market is right now going sideways. EMA is in the middle of this, in the middle of those bars, and this is looking like a trading range. So you don't want to trade in the middle of trading range like this. But hopefully you guys understand how to look for the reversals. Don't try to predict major trend reversal too early. You really need to give it a little bit of room. Okay, so hopefully you guys enjoyed the video. If you did, like the video, subscribe to the channel if you're interested in day trading. I'm going to see you guys in the next one. So bye bye everybody.